We got to talk about time frames and moving averages, don't we? I can't change. Um, anyway, and that's going to go over to. Okay, so we're going to talk about time frames, and we're going to talk about a little bit about moving averages. What did I do a little bit with y'all anyway? I mean, obviously, if you're in the training, you got these moving averages. Yeah, these moving averages are over there for anyone, aren't they? From what I've understood from everybody saying.
Yeah, they are. Yeah, they're in both
They are.
courses now, and I think we even put them in the VIP group.
You
So I
can get
think
them
that's
right off of
good.
Trading
Yeah.
View from what people tell me. I don't know how that happened. I'm not too worried about it. Moving averages.
Okay. Yeah, they're public on TradingView now. So
Okay, so if any of you guys listening to me don't have it, reach out to somebody, Mike, or come over to the school or go to the support channel. I have no problem with you having them and putting them on your chart. Having moving averages on your chart is not. I mean, they'll help you, but you can't trade around moving averages. What is blinking on my screen? I don't know what that was. So, and we're going to talk about a little bit. This first section is going to go over to the beginner course. So, I'm not going to really talk about the market too much. We've talked about Bitcoin, and you can see they just switched over. And this bounce was there. If you're in the matrix room, we talked about it this morning. You could, I mean, it isn't that bad of a trade. The problem is it's not really properly set up. You're really trading against the down move. The area here, because it's crypto, the percentages, it's almost an easy trade. You got to be careful with it. I can't say that you did anything wrong. It's not one of those that I prefer. Because I teach a big group and we're looking for areas where you have more than one or two targets. Most people, most people who took this trade right here probably didn't get it at the complete bottom. They bought it way before. They might probably bought it right here around 10.5 or something. And then as soon as the sell bar come in, they took their profit. And the people in crypto land that do stuff like this, they'll tell you they got every bit of it. Now, the other group of people who took this trade, what have they done? Lock my stuff? God, trading you so stupid. You can see I got excuse me. I know not to draw on the chart because. Okay, Trading View, can I grab that and move it, or did you lock it again? Wow. Okay, so I have some sort of why they keep locking my stuff, and then it locks it right back, and it unlocks it. Who knows? All right, well, Ti, that's the program, ain't it? I ain't locked nothing. Okay, and then it's gonna lock it right back. I got so y'all know somebody. Okay, let me get the drawing over there. I should have never drew on the chart because they sure gonna make my life hard. So the other people that took this trade will hold it and let it go all the way back against them because they think it's going to the moon. I got some crazy stuff going on with my internet to you. Can you hear me?
yeah, we got you. Sorry, I didn't
Okay.
unmute the last time I talked, but you can go.
No, I just got some blinking and some stuff popping up on my screen and stuff. Probably, I don't know if that's anything to do with what was going on out there, but I've had two blinks on both screens right now that just came out of nowhere. Here comes the swear jar. I think I got all my swearing out. I even sweared right there on 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 Facebook. I wonder why our numbers are down tonight. Bitcoin taking off like that because it's the 4th of July. Maybe everybody's getting ready for the 4th of July.
It's
Um,
holiday time.
let's see here. I'm gonna say hello to everybody. Ashley, George, Andrew, Justin, Ron. How you doing, Ron? Y'all keep asking me about this volume analyzer. I may try to put it on there because to me, if you can find some use for it, you can come talk to me about it. I'm probably not going to put it on there. I don't. I just if I can't get level 2 and level 3 volume data, I'm not too much interested in it. I want to see the real order books. I've never used a buy and sell wall in my life. I don't never would, and I saw that volume analyzer thing come across. See this blinking? It just keeps showing up. I saw the people who started using that. It's almost like that. The people keep talking about the algorithm thing, that the log or something. It's just like the flavor of the crypto TA month. And a couple of people asked me about it, but I don't need it. I can do what I need to do without it. So, if it's helping you, and y'all can come and give me some feedback on it and stuff, but I'm not too much about adding anything to my TA right now. I've been doing this a long time. And if I felt like I was lacking something and something could add to what I'm looking at, maybe. But I can look down here at the bottom and see what I need to see. There's some volume on this move, but you can see the volume is going down. And I don't mean it can't come. That's the problem with trying to trade around volume. It's just going to come when it comes. If you don't understand the market structure and potentially what is going on here, it's not going to matter. And what it comes down to is that candle right there. I don't need no volume analyzer to tell me what they just did right there. That is a, what is it?
Sorry, I didn't mute.
Okay, that is a complete doji. That is a complete, oh God. Did you know what that candle is? The people got all the way up there and they looked down and they said, uh-oh, it's time to take profit. It's time to take profit. So, you know, I mean, that's what you're looking at. That's normally what they do here is an exhaustion move. You know, and it's, you know, it's Bitcoin and there's, you know, the thing about this move, I was talking to Jason last night because he had made a chart and he had the, you know, the channel here, and that's all that really is a channel. It's not a trend. I mean, people call it a trend, but to me, it's a channel. It's just been set up so fast as crypto, and you know, you can kind of see they went up and they did a sideways move going into the pole, coming out of the pole, most likely. And this is what they like to do. And sometimes they do something different. I mean, BNB did something completely different, but BNB wasn't coming off no bottom. It was completely in wide open space. Probably push up to the 3.6. That's what they like to do. They would really have to go up here and really press this for me to think they're going to go higher. Now, y'all have to understand, you know, I jump ahead of the market. I see things. I trust this 4.23. I mean, hell, it took so many times to find the one that they were doing. They used the whole leg of money. You know, there's a lot of reasons why. To me, it's summertime. You know, it's just the tether thing. You can just keep going on and on. So, you know, for me, this is, I didn't even trade this bounce. I know some of y'all did. Y'all could have made some quick money on it, especially with the training and the stuff I show you. It's not something I'd put a signal out on. The only way I would have put a signal out, or a signal for everybody, would be if they would have brought it down to about 85 and really gave me a place to hide. There's no place to real hide right there. They could have come right up here, turned it and ripped it again, and then did the move. So it's not a good trade. The percentages and what you added to your bank account if you took the trade, and if you know what you're doing, I can't say it's a bad trade, but for me, it doesn't hit all the check boxes. And so to me, I use this move because I've got long-term BTC. So now I'm watching it and I'm looking over in alts, because now my job is to try to, if they're going to turn this and they're going to go down lower, and I really feel like they will, and they haven't proved to me they won't, and I'm not adding to my long-term BTC here. You know, and I didn't, it's just a bounce out. I go to my higher time frame, the day chart, and it's just a bounce out in the middle of nowhere. You almost could even come now and say, well, it's still a downtrend, ain't it? Now, you know, you're pulling from the wicks, but you should be able to see that on the day chart where the Warren Buffett candles are. On the day chart. On the day chart in Forex is where I call the Warren Buffett candles. In crypto, you almost have to go to the weekly chart. Now let's talk about the time frames, because that's what this section is going to be. And I just kind of got into BTC, and that's not a problem, because you know it's going to be in the beginner chain and it doesn't hurt. Look at this. Look at this candle right here. So you got a doji. A little bit of candle work. This is a doji. This is confusion. This is profit taking. And then you got this candle where the buyers just come in, and now they're pushing. Do they need to square that candle up? That would be your first question. So let's go over here. Now I have to go to now we're going to walk the chart, walk the time frames. The 1 hour. Why would you use the 1 hour? And I'll let you guys talk, you know, give some answers. There's some people who don't know in the room. Y'all can kind of give your answers over here. This will help people who are reading in the chat box. Why would you go to the 1 hour? And I'll also ask you, do you guys go below the 1 hour? Because it's very rare that I go below the 1 hour. In Forex, I use a 15 and sometimes a 20, a 10 and 15 minute, and it's more for my ProAct charts. My ProAct charts are bright green and bright red, so I don't have to look at volume whatsoever. It's registered inside of the candles, and there's different things that are programmed in there. And Forex is different. It can dance. It's got the right liquidity to it. It's not one candle at a time. It moves for 2.5 hours, 3 times a day for the most part. Well, really twice a day, because the Asian market in Forex will pop 20 pips, and then by the time you get to London, it's all giving it back. So Why would I use the 1 hour? One of the biggest reasons I use the 1 hour in crypto is to go dig into a square up, because the square up will look on a 4 hour a day, it'll look like it's a square up, but you can't really see into the candles. So, you know, you have to go, let's go to the 4 hour and let's go find a place on the chart. Obviously, that candle right there needs most likely to be squared up. So I can go to the 1 hour and make sure that there's not candles inside of here where they have squared it up. So I'll go find that candle, and you can see they didn't. There's a place on this chart right here where this has not been squared up. You can see the candles better. You can see right, well, I don't know why that keeps coming up. I mean, it shut my computer down. Right here, you see where they took off and they never came back and squared the books up. Now, square ups may confuse you. We'll get into a little bit. We'll do a section for square ups too, and kind of update what's over there on the beginner course so y'all can reference it. Because there's so many different levels to understanding square ups. And you know, a beginner course and what I do in here is just the beginning of it. Watching it in real time in a matrix room and experiencing square up after square up after square up after square up, and all the different ways they do it. Sometimes they leave them behind. Sometimes as they're going up, they take care of business. And the little nuances of whatever trade you might be in and how that coin is doing square ups. It's not always going to be the same. We talked about last night about Bitcoin in 2017, how it left the 4,200 behind, but then it eventually came back to it in a year. And the case that it could do it this time too, if it don't come back to that 4,000 level, that it's possible. It's done it before, but then they eventually come back to it, don't they? Now in Forex, they may leave a square up behind for years. In the equity market, they can leave gaps and square ups behind, but for the most part, a chart always comes back to them, because there's money that there's people upside down. There's liquidity providers. There's people that have to take the other side of the trade in order for the market to flow correctly. And most people have no clue that it exists. And if you tell them, they think it's crazy, and that ain't how it works, because the fundamentals and stuff T.I. tells you, that's what moves markets. Was there some news that come out today about Bitcoin and Libra, or something about, I just saw about Facebook or something, and that's why I've been, you know, I saw a couple posts today about Bitcoin went up 20% because Forbes said something or anything. But anyway, so you have to go to the 1 hour to kind of dig into the square ups, because the problem is, let's go back to the 4 hour. Sometimes you'll see a candle and it'll look like a square up over here, but then when you go and dig into it, you can see where the candles have kind of, and sometimes they'll sneak in a wick on you. I know some of y'all have seen it, where they'll sneak a wick in on you, and you'll be like, I thought that was a square up, and then you move it to the side, and I'll be like, but look, they squared it up right there, and the wick will be hid from you. Once they wick it down, it's squared up. Okay, so that's one of the reasons I use the 1 hour. The other reason I will use the 1 hour is when I'm looking for entries and exits, because on the 1 hour, you do not have trends. Okay, on the 1 hour, you don't have trends. The trends in crypto are crazy to begin with, and that's why I mean, it's important to learn how to see trends, and it takes you a little while. It's one of those things you got to do over and over and over, and you start to spot it. And a lot of people will make it real technical. And Forex is way more important to have your trends on right. Find a heart line. What I've done, I don't really teach all about heart lines, but it shows up in Forex where you find that middle part of that trend, and they tend to gravitate toward it. In crypto, the trend lines get busted, and most of the moves are unsustainable. You can't rely on them for much of anything. If you're going to go looking for trends, I would say go on up to probably the day chart and the 240, and even the 240, they'll rip them. On the 60, you're talking about channels, and channels look like trends, but they're just channels. They're just small time frame, you know, moves that are really not strong, and you can see it here. Now this one will show up in our time frames as you go, but you know, when Jason was showing me this last night, I was like, yeah, I was like, that's not really a trend, because it's just too early. It's a channel, and you can see how easily they broke it. You can see how easily they broke that moving average too, and you can see a little bit of a sideways move there. That showed you that they're probably going to pop it. Now there's no pain trade in this sucker right now. The longs and shorts are ripped, so this is to move, probably most likely, if this is an exhaustion move and this is just to take in longs. I don't know, I can't go over to the short positions, long positions, and say there's really anything like that going on right now. So to me, it's an ABC, but it's an A, and I'm looking for the B, and I'm trying to play the scenario out of a structured counter trend wave. If that is going to be a 1, A, and we have to go to a higher time frame. So now that's pretty much what I use a 1 hour for. Y'all may have different things, and every now and then I can't find what I want on a 1 hour, and I may have to go just a little bit lower just to dig in. The channels help me when, and the reason I go find a channel, say I wanted to take this trade right here, and I see them do that, and I see them do that, and I see them start heading down, and I see the bottom of the channel. Well, that's a good place for me to enter, right? If I was going to take this trade. And then I may decide that if I was going to do some short-term day trading or whatever, and I had a good channel. Now, this goes into some more stuff, because you really don't, you want to, when you trade channels, you want to go with what's going on. And at this point, they're going down. So you really want to, if they're going up and they create a channel for you and it's going up and they're making higher highs, you catch the bottom of the channel for an entry. And that's in the entries and exits and stuff like that. But that's the reason why you would go to the 1 hour, to find the top of the channel, find the bottom of the channel, which potentially could give you an entry or an exit depending on where you are in the trade that you're in. So Ron says for entries and exits, identifying legs of money. There you go. That's another reason. Sometimes when you're trying to put fibs on, there's a very good reason here. Sometimes when you're trying to put fibs on and you can't really see what they're doing, you have to come to the 1 hour to try to get a good feel for where the money's coming in, and it'll help you put the fibs on. Okay, and that's goes into some different stuff. And there's another thing, you can see the price action as they work the fibs a lot better on the 1 hour. Now, one thing that's very interesting, and I'll have to pop to another chart for this one, is Lord have mercy, that was my chart this morning when Facebook didn't work. Swear jar. It says bullshit. Swear jar. So what's interesting about Bitfinex is the liquidations and stuff that happen over here. You can come over here to the 1 hour, and you can really, if you're putting fibs on, now there's tether situation, they go higher and do kind of crazy stuff over here, but you can work your fibs over here on Bitfinex if you use Bitfinex, and you can see the price action and the liquidation moves a little bit better over here. Sometimes when I can't get my fibs on exactly right, I'll come over to Bitfinex and start working on my fibs and look, and you see, to me, over here, you see the liquidation moves a lot better. You see the wicks, they're liquidating people up and down, wickety wick. You can see the square ups real good. You know, they square up all this is because they're liquidating over here real bad. And I mean, you easily can back up to the 1 hour and you see. It's not hard to see, and that's a lot cleaner square up that's being left behind than back in 2017, I can tell you that. Now, go back to Forex. Now you can see the gaps over here. Look at that gap they left behind. They just closed it. So a gap is kind of like a square up too. Okay, I mean it's pretty close to the same. Gaps are kind of, you know, I don't want to get into gaps right now. I don't want to jump into that rabbit hole. Let's go back over here to Bitstamp, and let's go to the 3 hour. Now, I don't use the 3 hour for entries or exits or anything like that. I use the 3 hour because sometimes the charts are so spread out that I get a better visual look at the chart by going to the 3 hours. Sometimes I'm trying to look at something or find something on my chart or trying to squeeze it together. Now, one of the things y'all see me do, you see when I do that right there and I kind of position my chart, everybody's going to be a little bit different in how you see charts. I'm rolling my mouse back and forth. And for me, I have to get those candles where I can see them. You know, people send me charts and they got their stuff all like this and all like this, and I'm like, I can't even tell what's going on. What are you looking at? And this is something that I've learned over the years. You know, I have to kind of spread it out and get it to a certain size. And this is going to be, we're visual creatures. I don't see things this way that you do, and that's why, you know, learning TA and learning charts and stuff like that can be different for everybody. And you're going to have to learn how to kind of move it around. And I would say that Scott's an artist. I would say that, you know, practice with rolling your mouse back and forth, and then over here on the side, that moves it up and down. And you get to where you'll get comfortable where you see it your way. And I can tell you one thing, sometimes TradingView comes in and they change the colors or the settings on me, or they do something crazy, and they'll change the colors of that red and green, and I'll have to sit here for 2 hours trying to get it back to how I had it, because I can't see it like I saw it before. So you got to remember that. You got to remember you're a visual creature. You're not going to see it the same way I'm going to see it. That's why tools, different TA tools. That's why I brought up the volume analyzer thing, because I've had a couple people ask me about. Hell, if it helps you, I'm not going to tell you not to use it. I'm going to probably, if I see a lot of people using it and they start to struggle with it or whatever, I'll go over and use my time. I don't think I'll ever use it, but if it helps you, it helps you. If using the RSI is a way for you to visually see stuff, and it helps you, or the MACD or any of those tools you find on there, I'm not going to tell you not to use it. I'm going to tell you better not rely on it. A moving average crossover and different stuff like that, I'm going to warn you completely against. What is that doing right there for? That's your trading views acting up too. Facebook got a whole trading view. So the 3 hour is more for visually seeing something. Some of the alt charts are so spread out. That's where you have to bounce around your time frames too, because you get these charts where it's just went sideways for months and months and months, and you're trying to look back at the big move, and it's just all this sideways crap in front of you. I mean, those charts that they have on those exchanges, I don't know how anybody uses those daggone things. I can't even look at them for very long. It took me a long time to just get used to using TradingView, because I was so used to my ProAct charts. And I've kind of forced myself to use it, and that's what you have to do. And I've had this situation happen to me very many times in crypto. I mean, in Forex, where I got so used to using FXEM, and then they lost their license, and I had to go use Forex.com. I couldn't even use their desktop. I was having to use their stuff on my phone. And it was the only broker that I had available until I got to Interact. I just had to go start using Interactive Brokers. And even Interactive Brokers, which I love for their spreads and stuff, their platform is horrible. And you're going to find that with a lot of brokers and stuff. Their platforms that they just talk all this good stuff about, when you actually go try to use it, MT4 is a piece of crap. I see these crypto companies out there promoting this MT4. Y'all, MT4 is a piece of crap. It don't show you nothing. You can't even tell what's going on with your money. I wasted a whole year with that thing. I'll never go back and look at that thing. I don't care what they say. Ninja Trader, you ever seen Ninja Trader come across? That thing's got so many bugs in it, it'll make you go crazy. And they make it like it's the best thing ever. And this thing has bugs in it too. You see it blinking right now. So the 3 hour for me is not necessarily entries, exits, or doing chart work. It's a visual thing. I may do some, y'all see me go, I'll go to the 1 hour. I was like, man, I got to go to the 3 hour. I can't see nothing. And it's more or less, I'll go to the 1 hour and it's just too spread out. Now I've jumped to the 3 hour to see if I can see it a little better. You don't have that so much on Bitcoin. On the 4 hour, the 4 hour is the most important chart in Forex. This is where you find the trend. This is a little different in Forex. In Forex, is 60 minutes where the big boys enter and exit, and you can pick them up there. And you can kind of do that here, the we ain't doing it no more, or a break hook and go and stuff like that. It'll start on the 60 minute. It's different in crypto because there's more percentages, it's more volatile. So I tend to find more consistency on the 240, but it has to start at a time frame before that. So and it'll start on a 10 minute. A break hook and go, or a we ain't doing it starts on the 10 minute, but it could be just a little candle and it could confuse you. So, I find more consistency on the 240, and y'all see, I spend a lot of time on the day and the 3 day. So when I've moved from Forex over to crypto, I've had to kind of move up time frames. I still find the channels and stuff on the 60, but most times even the 240 will give me that channel because of the percentages. I mean, sometimes the bear flags don't even show up real good on anything with a 240. There were some people see this as a bull flag. This is not a bull flag. They went too deep. You can't call this a bull flag. You could potentially call it a we ain't doing it no more if it was on the right part of the chart and it hadn't hit a 4.23 and it hadn't hit a 618 and it hadn't had that daggone doji candle. That's the problem with, people when taking my information. It's a we ain't doing it no more. I'm like, y'all ain't in the right place for that. It's a break, hook, and go. But what level did you break? Don't have all the pieces to the puzzle. And that gets people in a lot of trouble. So the 4-hour trends, the moving averages here are to me are more significant. You'll have to study and go in the past and do some chart studying and stuff and looking and you know there's no simple answers, and we're going to go through moving averages, but what you're going to find when I start going over the moving averages is that I'm going to tell you don't rely on them. You use them visually also, and you better go study lots and lots of them. And sometimes when I'm trying to figure out Bitcoin, I may go over to Litecoin and put it right beside each other, and I'll watch how they did the moving averages. I also know in crypto land, they like to break down below them and trick people. So you start to pick that up. So, you know, a lot of people say, well, if it breaks below a certain moving average, I'm out. Or if it breaks over a certain moving average, it's a golden cross, it's going to the moon. You cannot do stuff like that. One thing about moving averages is they're very lagging and they look great in the past. But when you're doing them right in here, they're not so helpful. And that's why people will come in and show you all these things and these indicators and say, well, look, this indicator, it just showed me, just wait for it to cross over. But that ain't happening in real time. And people don't get that part. It don't happen in real time. It's showing you in the past, and it looks wonderful. Hey, you could have just took BTC right here and just kept your stop loss all up under here, and it would have worked, and it would have worked, and it would work. It's not that easy, y'all. And I think most of y'all have ever got any kind of experience. You got to understand those moving averages look great in the past, but when you're going in the present, it ain't so great looking no more. Okay, so you got to, you know, moving averages are important, but you got to learn how to use them, and they're more visual. Now, when I go to the day chart, I knew I was going to eat up most of your time. I'm doing pretty good. When I go to the day chart, the moving averages are way more important to me as far as trusting them. And then the patterns and what I pick up here, they're clean candles. Now, not on all the cryptos. Sometimes you go to the day chart and you'll see the wickety wick, and I just want to keep moving. Somebody asked me to look for it. Hey, look at this chart, and I go look at it, and I'm like, why? Look at it. I go to the day chart and it's just a mess. Now Bitcoin's a little better. You know, it's solid candles. You can pick up the trends better. You can come in here. A lot of times what I'll do is I'll come to the day chart, especially when I'm making like from scratch videos, which I haven't done in a while, but I got so many from scratch videos over there in the Slack room. It's crazy. You can just pick patterns up, you know, change this color. You just pick patterns up. You know, one of the big patterns on Bitcoin that I pick up right off the bat visually, because I've been doing this a long time, is that triangle right there. You know, and you know, I pick it up on the day chart, and you can pick up patterns somewhat easier on the day chart. Oh, let's go back to the 240. Another thing that's important about the 240, and y'all can keep talking down here and what y'all get out of it too, because everybody's going to get little different things. Now Bitcoin, I have to go to the day chart to be able to do chart analysis, even though I'll go to the 240. Now, here's the thing. I use the 240 and the 240 is where you pick up Elliott Wave the best. So you're going to have to be forced to come in here and see how you see the ABC. See how you see the ABC and the 3-wave? Now, I've showed you this. This is not the easiest thing to pick up when you're first learning. Now that I've showed it to you, you know, you can you start to see it. A, B, C. The C has to take off the top. That's one of the rules. Here, these are just bounces. It's still a trend line. It's just a trend line. They don't break it. But right here, they do an A, B, and it don't quite break the rule, but it's close enough that I get a check mark. Say, okay, I'm okay with that. And I can see that. I can see it a lot better in this chart than I can see on other. Now you might say, well, there ain't no way there's 1,500 because these people put 1,500 million waves right here, but this is a sideways move. And once you understand that that sideways move is just part of the next wave, because sideways is a pole. It's a crazy looking one, it's a triangle, but really all you're looking at is a sideways move. And you start to see it as you go up the higher time frame. That all they did was go sideways. And that is just an extension of that wave. Lots of people don't understand that part. They don't really explain that part. You have to really get that. And Elliott Wave is tricky. Elliott Wave is tricky, and I don't want to take no beginners into the Elliott Wave. But the 240 is where you can pick that up a lot better. You see here, it just looks like it's doing the same thing. But when you go to the 240, it's a little clearer to you. Here, it just looks like they're just doing a down move. But you know, you can see that right through there. And this is the beauty of the day chart. It's cleaner. So I can see that 3-wave. I start to pick up when you have all the pieces to the puzzle. You know, when you start understanding things, I can see that 3-wave. I can see that 3-wave. Okay, I can see that pattern here. I see that break. I see things a lot clearer on the day chart. So what would make me go to the weekly chart or the 3-day chart? I'll spend a lot of time on the 3-day chart too. Cleaner. It's just cleaner. Sometimes I can see the legs of money. Sometimes you have to go when you're really digging into fibs or a 4.23 like Link did. You got to go to that 1 hour and really kind of dig into where those legs come in. Sometimes you have to go to the 3-day when they've done a move like this and really understand. We'll do this. When I go through this, it goes through all kinds of lessons for you, so it'll be good for you to go back and review this. You can see that's just a sideways move down there, and you can see where the money come in, and you can see that first pullback, and that's where you find legs of money. Now, crypto does everything a little different, so sometimes they'll just use the body, sometimes they'll use the wick. Well, Bitcoin decided it was going to use that whole daggone thing right there. You have to almost get it perfect. And this is where you have to dig into your lower time frames to really see where that leg of money come in. Because if you don't get it perfect, you won't have your fibs on correct. See that pullback? That's where that leg of money started to correct. Let's see if I got it on right now. You see, it's still just a little bit, and it's a little minute of a move gets you to where you need to be. And let me just show this to you so you don't think I'm just fudging it and not know what I'm doing. It's what people say all the time. You have to get it perfect. Oh God. And here's what you got to do. You got to go to the 1 hour. Trading view starting to aggravate me. I have a problem with when things start not working like they're supposed to. I get very aggravated. Right in there is where that money come in, and right in there is where they corrected it. So I'll go to the 1 hour to just. This is hand grenades and horseshoes when it comes to your money. You ain't supposed to be able to get it all unless you're just some savant, just genius, or you're just the best trader in the world. And you can see what you end up having to do with this one is really dig in there. And you almost can you just got to forget up there. And you see that little piece right there. You almost got to get it daggone near perfect. Now, you're on your 1 hour. So as you go up, you start to see the reactions on the fibs. And you can see the 2.36, 618, the 2.1.26. They pull down the 1.6. You can see them ride it, but they're piercing them. This probably needs to be pulled down just a little bit more. Then they go and they kind of pop up in here. They come back here. They go up. This is probably going to end up having to be pulled down. They still blown it. Good gracious. All right, this is the problem with fibs, because especially when you're trying to get it perfect, we're going to have to go back and we're going to have to make it real big. So right in here, they're just going sideways. They're going sideways, and you have to really dig into this, y'all, and you have to really understand this. You have to understand different parts of the puzzle here. Because here's your almost what I call an anomaly, or the head, potential head, and then they go up and they break through right here, and you find the place where they're coming down, and they're kind of on both sides, and you can see it. You can see they're on this side of the bar, and they're on that side of the bar, and they're just kind of coming up, and they touch it, and they go back to the other side, and they come back and they touch it, and they make a move here, and they retrace it, and then they start to come up, and right there's where the money come in. But then they hit it again, and then they start going up, and they don't stop. And that should take us, let's see if I can get it right this time. Perfect. Right there that should be right there. We may have to go to that one. I'm pretty sure there's where they hit it. They hit it right there, but they hit it right there too, because they hit it a little bit. See here, they're kind of just going sideways. Should be right there. That works the best. That's still off, and they've still busted it. Where am I on pit? I'm on Bitstamp. That's probably the problem. That is the problem, because this works out a lot better on Coinbase. Now that gets into a whole nother issue with crypto, but you can kind of see I've got it pretty daggone close. Just because they busted it just a little bit here on Bitstamp doesn't mean that much to me. It's more about proving the levels as you go up. You can kind of see it here. Let's do this right quick. Let's go to Coinbase because it's cleaner. So many Bitcoin charts. Let's see if we can get this to work out a lot better over here. And this is what you got to do, because we got all these daggone exchanges. Now, right through here comes the money, and they go up, and they keep going up, and they keep going up, and then they slam it down. So this is what I'm going to pull from, right about Bitcoin's always been tough because I thought they were just going to use that bar right there. And this is what's tough about fibs sometimes, and why you have to be so daggone, you got to be fluid with it. Should get us close. 618. I think it's still going to be off. Still off. You little daggone thing. Okay, so I can't find what I want. I'm gonna go up a time frame. I'm gonna take this sucker off because I should have never took it off to begin with once I found it. Right there. Or that's why we're always playing hand grenades and horseshoes, y'all. It's right. The 1.270 is really the secret here, how they hit it, because I've been catching them do that. 618, boom, 2.6, boom, straight up to the 4.23. And you see right in there, the money just kind of creeps. And then that's where I put my signal out and 20% popped up. Y'all thought I just had insider information. Target, they're frustrating. And that's why you have to do retracement fibs and support and resistance to help you confirm. And you have to understand there's 4.23s inside of 4.23s inside of 4.23. So just because there's a 4.23 don't mean they're done. Go look at it. LeBron says target fibs are frustrating. Yes, you can end up pulling a half dozen and watching which ones are proven by price action, but you can still have it wrong. So that's why that's why you add your retracement fibs. That's why you always look left before you cross the street. You pay attention to volume, and you have to know the big picture. And that's where the Elliott wave starts to come in, which is hard in crypto and is way over most beginners' heads. I try to keep it as simple as possible, but sometimes you don't want to convolute it too much. And really, fib targets and what I show you here is not beginner stuff. I mean, I've always used fib targets, but that's what I was taught first. But I've also always been taught to use retracement fibs. Now, and in crypto, the retracement fibs can be funky too, because the cookie cutter retracement is from the top to the bottom. And sometimes they'll just use the body or the wick, and you can kind of see they've pierced that level a little bit. They have. There's a chance that they may go up because they do like to pierce it, but you can see that 618 there. You can see they come up, and you can see they hit the 618 here, which is a very important fib. You can see the 1.68. You can see that if you understand some of my fib stuff from the Bubble Lounge, the pullback and the move from the 1 to the 4.23. And just because they pierce the level don't mean they ain't going to send it way down. And you look left, and you go to your 4 hour, and if you were back with me in the day and you remember, and you guys know this is the pole. It may not look like a pole until you stretch it out. This is what the time frames are for too. Here's your crypto party. Here is your we're having a crypto party. Too many people showed up. They sent it up on some news and got people to buy it. And then they come down and they broke hook and they live down there. Too many people showed up. So when you come back up, they blistered everything on the way up and went straight back to the crypto party, which is it's bullish. It really is. It's just, and I give people a hard time about calling this bullish, it's because they don't start saying it's bullish till we're up here when it needs a good daggone retrace to get back in.